Good evening, ladies and gentlemen, and welcome to Mr. Market's Mentor. I'm Andrew Packer, and let's just get right to it. In last week's video, we looked at the USA-North Korea geopolitical fears that were weighing on markets, and we saw that there were some jitters there, but just looking at the history of how markets perform during these events, it looked like things would eventually and quickly fade away. That proved to be the case this week. Geopolitical fears went to the side as North Korea blinked, decided, hey, maybe let's not nuke Guam. But instead, later in the week, we did get some more down-home political fears. But just like the geopolitical fears, this too shall pass. We've already seen a few times this year, big headlines about how the Trump administration is falling apart and how the agenda is going to be derailed, and stocks sell off for a day or two and then eventually recover. And I think that's just another situation we'll see there. It's just part of the normal, everyday part of market trading. It's what we call the noise. It's not the signal. The signal it's the fundamentals of the economy. It's how companies are performing operationally. It's whether the overall market is in an uptrend or a downtrend. That's the signal. All the day-to-day stuff, that's just noise. Look, news channels, they've got 24 hours of coverage to fill. They've got to fill it with something. So it absolutely makes sense that they're just going to kind of come up with whatever narrative they need to fill out as much time as possible. But the way events are unfolding is a little weird, and sort of in a broader sense, I feel like there are some potential dangers on the horizon, and they're sort of more existential dangers, because I think that Western civilization as we know it is reaching sort of a potential turning point. Now, when I say Western civilization, I'm really talking about three pillars, and those are free markets, the rule of law, and ethical values, or as it's sometimes called, like Christian values, Judeo-Christian values, but everybody's got an ethical and belief system. But let's look at each of these pillars. Just starting with, say, free markets. As a finance guy, the big problem with markets is we don't really have completely free markets. There's a myriad of regulations. If you are successful in your business, you're going to get taxed. That's going to be a drag on your returns. And it's really no surprise with the growth of regulations we saw under the Obama years that the post-recession recovery in the past 10 years from the financial crisis has been pretty much geared towards existing big businesses. You haven't seen a lot of the new business starts. In the 1970s, the economy was pretty bad in the late 1970s, but you had the startup of companies like Intel and Microsoft, which really grew the economy, 10, 20 years afterwards. So that's, as a finance guy, kind of the key pillar of civilization to me, but the other two are essentially equally as important. The second, the rule of law, it's a little more of a nebulous concept, but it generally means sort of, having guidelines saying, hey, if you're going to have contracts, you need a place in the forum where those contracts can be enforced if there's a dispute, and just sort of making sure that everybody is aware of sort of the rules of the game of society, before they sort of play along. And unfortunately, when it comes to sort of the rule of law, we have a political class that's just constantly moving the goalposts. For example, with the ACA, otherwise known as Obamacare, there have been huge delays in implementation, how it's been rolled out essentially compared to the written law. There were a lot of exceptions written in during the Obama years, and now you have congressional Republicans who have the votes and the power to make changes, and they're sort of balking because some of them think it's going to cost them at the polls, and they're going to, essentially, lose their re-election promises just as a result. So the rule of law is one of those things where once that starts to go, the rules of the game get muddied. It makes it easier for unethical players to kind of get ahead at the expense of sort of the more law-abiding, and so that's a challenge as well. And that also brings us to the third pillar, which is just that sense of ethics and values. And that's really the part that's felt off course to me this week, particularly with this sudden drive to tear down statues all over the country. Now look, I'm from California. It was technically a Union state, but it had pretty much nothing to do with the Civil War. I'm not descended from any slaveholders or anything like that. I don't really have sort of a dog in this fight, but I do know that our history is important and our past is important, and whether it's good or bad, it's important to have reminders of who we've been. It gives us a waypost and a marker guide for where we're going. And tearing down statues, just haphazardly with essentially mob rule, that goes back to the problem of rule of law. How do you effectively punish somebody for taking something down you might, agree needed to come down. But if you want to take down statues or move them into museums, have a vote on it, have public discourse on it, don't resort to violence. So that's sort of the challenge that I'm seeing as a potential longer-term threat, not just to financial markets, but just to the progress we've made as humanity in general. Now, bringing it back to financial markets, there's a lot of rhyme and reason to the history. We see a lot of ups and downs happen a lot, and how they're similar and how they vary can be the difference between keeping and preserving your wealth during a financial market downturn or losing money along with most others. So this week's market rally and drop was largely based on a lot of non-financial issues. I think those will pass, and that we'll get back to that sort of longer-term uptrend we're in. But it is a very slow-moving uptrend. I think you're going to be, very well off as an investor looking at companies that are just going to pay you dividends. You'll get paid to wait. If stocks do downturn, and they are a little expensive on historical valuations, so that could definitely, happen at any time, and every investor should always be prepared for a sudden 10 to 20% drop in something they own. That's part of the game. Financial markets, the way they drop, they shake out speculators, but they also tend to scare out a lot of individual investors, and then they end up panic selling at a time when they should ideally be buying more. So if we get these bigger drops in the market, look at it as a buying opportunity, but stick with quality names, companies companies where you do business with them, whether it's your cell phone service provider, your local utility. These are the kind of places where you can invest safely, and especially get a much better deal if you buy while there's some fear out there in the markets. So just keep that in mind. Don't let the short-term issues really drive your decisions. Look for the longer-term fundamentals, and then otherwise just look for those opportunities when there are slightly bigger drops than the ones we've seen in the past week. So stay safe and stay solvent out there. That'll do it for this week's edition of Mr. Market's Mentor. I'm Andrew Packer, and thanks for joining us.